Hey guys, today I'm going to teach you guys about ledger accounts. So you just need to know one thing, that there are two sides to every ledger account. You might write it in a different format, but I'm just going to teach you the format that I learned. Okay, at the top, you're going to, the other name for ledger accounts is called T accounts. So you're going to want to draw T. And on top of that T, you're going to have to write down the account name and the account type. Basically what this is for is you want to know where your money is going, okay? And there are two sides to the ledger account. As you can see, I have date, detail, amount written on the left. The left is called the debit side, and then the right is called the credit side, where it means money out. Okay, debit side means money coming in. Right, and in this video, I'm going to create these accounts. You can pause the video and take a look at them. And we'll move directly into the question. Okay, this question says, Bob has been running a business for a month now and wants to close his accounts. Note that all are in credit. Below are the details of the transactions. Okay, so on 3rd March, he bought goods from goods. Okay, so 7th, he sold to Ken. 9th, sold to Jack. 9th, Ken returned some goods. Okay, so we might have sold some bad stuff, or he has his reasons. Okay, 11th of March, we returned some goods. Well, because he returned the goods to us, right? It's broken, so we want to give it back to the person we bought it from. 17th March, Jack bought some goods. This should be bought. 27th March, we sold some to Jack. Yeah. Okay, so the first account we want to create is the goods account. Okay, the goods limited account. We know that on 3rd March we bought some, and on 11th we returned some faulty goods. Okay, so again, you're gonna need the T. You're gonna have to write goods. Okay, and we bought these things on credit, so that means it's a payable account. That means we have to pay him back in the near future. It depends on the contract that you signed. Okay, we know that on 3rd March we bought some goods, so there's gonna be money going out, okay, of his account, right? This is the goods account, our supplier's account. We bought from this guy, and we have money coming out from his account, so it should be on the credit side. Okay, money is going out from his account, and it's gonna enter our account, so that we will continue in the next slide. So on 3rd March, purchases 1,200. Okay, and on 11th March, we returned some goods back to him. So he's getting back his money. I'm going to put it here. Purchase returns. All right. Note that we need to make sure that both sides tally. I have 1,002 on the credit side. That means I have to have also 1,002 on the debit side. How can I do that when I only have 150? Well, I'll include the balance, and I'll call that the balance carry forward, balance CD. Okay, that way both sides will be 1,002 when you add them up. All right, and we know that we still owe goods limited this balance. So I'm just gonna bring it here. As you can see, this is the end of the month, 31st March. Okay, and then this is how much we owe this account. This is how much we owe goods limited, 1,050, and we're just gonna bring it to the next month, 1st of April, balance BD. All right, remember CD is the balance that you want to carry forward. You want to bring it to the next month because we owe him this amount, and we'll just move it there. Okay, so again, this is how much we owe him, 1,050, because we returned 150 worth of goods. Okay, now the next account we want to do is Ken, right? We sold some things to Ken, and then he returned some faulty goods. It's broken, so it's only logical that he gives us back. So again, the T, and then you're going to write down his name. It's an accounts receivable. That means, because all these transactions, they're made based on credit. So that means Ken, this account, we have to collect. Okay, we didn't get any money from him. We sold it to him on credit. So he didn't pay us. We just gave him the goods. Okay, that means he's going to pay us in the near future. So it's an accounts receivable, which means we can receive money from him. 7th of March, he received some goods, right? Because we sold it to him, but we didn't get any money. So there's money going into his account. It's going to be on the debit side, 240, because of the discount. Okay? And we know on 9th March, he gave us back some things. So there's money coming out of his account. So I'm going to write it here, sales returns. Okay, we sold some things to him, and then this is what he's returning to us, sales returns. All right, and then what we want to do now is we want to tally up. We know that this side is 240. That means this side has a balance of $40. Again, balance CD. Okay, carry forward, and we want to bring it to the next month, which is 1st of April. Okay, again, check again. This is 1st of April, next month. I'm already closing these accounts as we go, so we don't have to come back and look at them. Okay, and then this would be the end of the month because we don't have any other transactions according to this question, unless in the notes they tell you something else. All right. Okay, so next thing, we know that Jack, there's 3 kinds of transactions. 9th March, we sold. 11th, he brought back. And 27, we again sold. So the T, Jack, is an accounts receivable. We can collect money from him. We sold some goods to him, but it's on credit, so we didn't receive any money. He's getting our money. So debit side, this, he brought back some goods, so money going out of his account. Sales returns. And then he again bought some stuff, but he didn't pay because all this is on credit. So again, he's earning our money. He's taking money. His money is going into his account. Okay, that's the 27th. So we want to close the accounts as we go, so we don't have to turn back to this page. So we know that there's 3,200 on this side. That means there also has to be the same on the other side. And the remaining is going to be called balance CD. Okay, stick with me. All the remaining is going to be called balanced CD. Okay, and this is the end of the month because we're closing the account, right? And then we know that in the next month we owe him this amount. So just going to bring it to the next month, 1st of April. Now, next, we're going to talk about the sales returns, the purchases, and the purchases returns accounts. Okay, so sales, we sold to Ken and Jack these amounts. Okay, these are the sales returns, these are the purchases and the purchase returns. Okay, all 4 is important. You're going to need all 4 everywhere. Okay, so again, Ken, sales 240. Jack, we got 2 other sales. So because there's money coming into these accounts, you see on the debit side, that means if we were to open a sales account, it has to be on the other side because money is going out. So sales, okay, money is going to their account. That means money is coming out of our sales account. Sales account, money is going out, money is going out, money is going out. Reason why money is going out, let me stress this again, we're selling on credit. We're not getting any money. Okay, we're giving them free stuff. Well, until they pay us back. Okay, so these are the amounts, and the total is going to be that, right? And the total on the other side should be the same. So because there's nothing, I'm just going to write balance CD. Now both sides same. Okay, I'm going to carry the balance CD to the next month, just like what we do. 31st March, 1st of April, next month. Just like what we did with the other accounts. And I'm going to repeat this process, okay, with the sales returns. Ken has sales returns this, sales returns this. Notice this time, sales returns is on the right-hand side. So that means if we were to open a sales returns account, it should be the other side because this one, sales returns, money is coming out of their account. It has to go in somewhere, which is on our sales returns account. It has to come in. It should be on the debit side. Okay, the total is 800. Means the other side would have that balance, right? 800, and then we're going to carry it forward to the next month. Okay, same thing, same drill here. All right. Okay, and tally my accounts. That's all. Just closing them as we go. Okay. Goods limited. This is a purchases kind of thing. Okay, so we bought some things from this goods. So because money is coming out from this, that means if we were to open the purchase account, money is going to come in. So purchases, money is going to come in. Debit side, I'm going to write it. And then this is the total. That means the other side, that's going to be the total. Same drill, bring it to the next month. Okay, and then we also know that goods also has purchase returns. So same thing, it's on the debit, so this time it should be on the credit. As you can see, on the credit side. Okay, debit again means left, credit again means right. So just tallying up these figures, balance, carry forward, CD, bring it to the next month, 1st of April. Okay, so basically that is the end of today's lesson. That's all I have to teach you. And then for the next video, I'm going to actually do a harder question and gonna answer more of these challenging topics. What's supposed to go where? I'm gonna start including capital accounts. I'm gonna include bank accounts, this and that. Yeah. So just stay tuned, subscribe, like the video.